Welcome back to the Business Buzz, episode 5. And we're kicking things off with a deep dive into some pretty fascinating market moves.
The kind that make you wonder what's going on behind the scenes.
Right. Like, what are the big players really up to? So get this. Hedge funds are pulling out of stocks and piling into real estate.
Big time.
Yeah. And we've got some sources here from johnfruland.net and GB News, and they paint a pretty interesting picture.
Yeah, so we're going to unpack all of this, why this is happening.
Like what it all means for you.
Exactly.
Oh, yeah.
One of the things that's really striking here is the sheer volume of this shift.
Yeah.
We're not talking about a few tentative steps here.
Right.
This is a full-blown sprint away from stocks.
Oh, wow.
Yeah, and data from Goldman Sachs actually reveals that investors are placing 10 times more bets on stocks falling than rising.
So that's a pretty big red flag, right?
Yeah, I'd say so.
I mean, it definitely sounds like there's some serious fear in the air. And our sources point to a couple of culprits here.
Oh, yeah.
Yeah, President Trump's trade wars.
Okay.
And that looming threat of inflation.
Yeah, well, trade wars are notorious for injecting uncertainty and volatility into global markets.
Right.
It makes businesses nervous.
Of course.
Supply chains get all disrupted.
Makes sense.
And suddenly you've got investors pulling back like it's a game of hot potato.
Yeah, nobody wants to get stuck holding the bag when things go south. Right?
Exactly.
And, it's not just any stocks they're shying away from either.
Oh, no.
No. Our sources highlight specific sectors that are being particularly hard hit.
Like what?
Like industrials, consumer goods, energy, the ones that are heavily reliant on global trade.
Oh, yeah. Makes sense.
Yeah.
And here's where things get even more interesting.
Yep.
Even the so-called Magnificent Seven tech giants,
The big guys?
Alphabet, Amazon, Apple, the whole crew.
Right.
They're showing some signs of weakness.
Yeah, well, speaking of weakness,
Yeah.
I saw that GB News article about NVIDIA's massive single-day loss.
Oh, yeah.
Yeah, 589 billion
No.
pounds. That's enough to make anyone sweat a little, right?
Sure.
But what's really going on there? What happened?
Well, NVIDIA's case really highlights how quickly the tech landscape can change.
Yeah.
A Chinese AI company, DeepSeek, they've emerged as a major competitor, and that's really spooked investors who were, betting on NVIDIA's continued dominance.
So it's a reminder that even giants can stumble.
That's right.
Okay, so we've got hedge funds running scared from stocks, and even the tech giants aren't safe.
It's a wild time out there.
It really is. And you've got to wonder what this means for your own investments, right?
It's a valid concern.
Especially those with retirement savings or pensions that are tied to the stock market.
Yeah, market volatility like this, it can have ripple effects throughout the whole economy.
That's a little scary.
It is.
Yeah.
And we're talking about potential impacts on your job security, the value of your home, even finding for public services.
Wow, it's all interconnected.
It really is.
So where are these hedge funds putting their money if they're fleeing stocks?
Well, it turns out they're turning to an old favorite.
What's that?
Real estate.
Oh, real estate. Interesting.
Yeah, johnfruland.net actually reported on this trend of hedge funds just snapping up real estate stocks.
Really?
Yeah, for 4 weeks straight, the fastest we've seen in months.
So real estate is like a safe haven during these times of economic turmoil.
It often acts that way. Yeah.
Interesting.
Yeah. Property values and rents tend to rise during periods of inflation, so it offers a potential shield against, that decreasing purchasing power of cash.
So does that mean everyone should be rushing out to buy property right now? Is that the takeaway here?
Well, hold on. Let's not jump to conclusions just yet.
Okay.
Real estate is a complex beast.
Right.
It's not as simple as stocks are bad, real estate is good.
Yeah.
We need to dig a little deeper here to really understand all the nuances.
All right, well, let's do that then.
Let's do it. It's fascinating because this situation actually presents both risks and opportunities.
Oh, how so?
Well, remember, market volatility, it can swing both ways.
Oh, right, yeah.
So what spells trouble for some investors
Yeah.
can actually be a golden ticket for others.
Interesting. So are you saying, like, for those with a bit of an adventurous spirit and a healthy appetite for risk,
Exactly.
this could be a chance to buy low on stocks that have taken a hit?
That's the idea. Think of it like a Black Friday sale
Okay.
for the stock market. When prices drop, savvy investors,
Yeah,
they can snag some real bargains.
I like bargains.
If you believe in the long-term potential of a company or a sector, a market dip can be a prime opportunity to buy those shares at a discount.
Okay, but that takes some serious nerve though, right? What if the market just keeps sliding? What if this isn't just a dip, but the beginning of something worse?
That's a valid concern for sure,
Yeah.
and it really underscores why thorough research is absolutely crucial.
Right.
Don't just blindly grab any stock because it's cheap.
Okay.
Look for companies with strong fundamentals,
Fundamentals.
consistent earnings, manageable debt, and a competitive edge in their industry. So quality over quantity.
Exactly.
Don't just fill your cart with whatever's on sale.
Right.
Seek out the hidden gems with real value.
That's it. And this is where a long-term perspective becomes your greatest asset.
Yeah.
Short-term market fluctuations can be unsettling.
Oh, for sure.
But if you're investing with a long-term horizon,
Yeah.
like retirement, for example,
Mhm.
you can ride out those dips and bumps and ultimately benefit from the market's overall upward trajectory.
Okay, that makes sense.
Yeah.
That makes sense. But what about real estate? We talked about hedge funds kind of flocking to it as a safe haven.
Right.
So does that mean it's a good time for, the average person to jump into the property market?
Well, as I mentioned earlier, real estate markets are incredibly localized.
Okay.
You can't just glance at national trends and assume they apply to your specific city or town.
Right.
You really need to do your homework and understand the dynamics of your local market.
So what are some key factors that listeners should be considering when evaluating their local real estate market? Well, there are a few key indicators to watch: inventory levels, interest rates, job growth,
Yep.
and population trends.
Got it.
So, for example, if inventory is low and demand is high,
Yeah.
that means you're looking at a seller's market,
Right.
which typically means higher prices.
Makes sense.
Interest rates, they play a huge role in affordability.
Of course.
Higher rates mean larger monthly mortgage payments. And of course, job growth and population growth, those are strong indicators of a healthy real estate market.
So if someone's in a market with, robust job growth,
Mm-hmm.
a growing population, and favorable interest rates,
Mm-hmm.
that could be a good sign to buy.
Potentially, yes. But again, there's no universal answer.
Right.
You need to factor in your own financial situation, your long-term goals, and your risk tolerance.
Right. It's about finding that sweet spot between risk and potential reward.
Exactly.
Speaking of risk,
Mm-hmm.
what are some potential downsides of investing in real estate,
Mm-hmm.
especially in a volatile market like we're seeing now?
One of the biggest risks is illiquidity.
Illiquidity.
Yeah, real estate isn't like stocks, which you can buy and sell in just a few clicks.
Right.
Selling a property takes time and effort,
Oh, for sure.
and there's always a chance you won't get the price that you'd hoped for.
Especially if the market takes a downturn.
Right.
You could be stuck with a property that's worth less than what you paid for it.
Exactly. And then there are the ongoing costs of ownership.
Oh, yeah.
Property taxes, maintenance, insurance, these can really add up, and if you're not prepared for them, they can eat into your profits.
Okay, so it seems like real estate can be a solid investment, but it's not without its risks.
That's right.
It's not a guaranteed path to riches, and it requires careful planning and research.
Couldn't agree more. Having a trusted financial advisor can be invaluable in navigating the complexities of the market and making informed decisions that align with your goals.
So we've covered a lot of ground here on episode 5.
We have.
Hedge funds, fleeing stocks, the potential for a market crash, and the pros and cons of real estate. It's a lot to digest. But I think the overarching message for our listeners is knowledge is power.
Absolutely. The more you understand about the market's inner workings,
Yeah.
the better equipped you'll be to make smart decisions
Right.
and safeguard your financial future.
And remember, this goes beyond just money.
It does.
This is about your life, your dreams, your ability to achieve your goals. Don't let fear or uncertainty hold you back. Take action, educate yourself, and take control of your financial destiny.
Well said. And let's not forget that this current economic climate, while potentially challenging, also presents some very unique opportunities.
Oh, wow.
For those who are willing to adapt, learn, and make strategic decisions, this could be a time to not only weather the storm, but to thrive in it.
No, that's a powerful thought.
Yeah.
So as we wrap up this part of our deep dive, what are some key questions our listeners should be asking themselves as they navigate this complex financial landscape?
Here are a few thought-provoking questions to consider. What are my long-term financial goals? What level of risk am I comfortable with? Is my portfolio diversified? Am I staying informed about market trends? And crucially, do I have a trusted financial advisor who can guide me through these uncertain times?
Those are some excellent questions to ponder.
Yeah,
And honestly, they're questions we should all be asking ourselves regularly, no
absolutely.
matter what the market is doing.
Financial literacy is an ongoing journey. The more you learn, the more empowered you become.
And that's what the Business Buzz is all about.
That's right.
Empowering you to make informed decisions about your money and your future.
Now, before we move on, I want to circle back to something we touched on earlier.
Okay.
The potential impact of a market crash on California. This
Okay.
is a topic that deserves a closer look, and we'll be doing just that in our next segment.
That's right. We'll be exploring the unique challenges and opportunities California faces in this evolving economic climate. So stay tuned for part 3 of our deep dive. Welcome back to the Business Buzz, episode 5. We're continuing our deep dive, and now we're going to take a closer look at how all of this might impact California.
Yeah, California is a really fascinating case study here.
Oh, how so?
Well, I mean, it's the home of Silicon Valley, right?
Yeah,
A global powerhouse of innovation and technology.
Right.
But that reliance on the tech sector makes it particularly vulnerable to market fluctuations.
Yeah, especially when those fluctuations are being driven by anxieties within the tech industry itself.
Exactly. It's like a double-edged sword. And we actually have some data from the Comerica Bank 2025 California State Economic Outlook that really brings this point home.
Oh, okay. What do they say?
Well, initially, they were projecting some pretty robust growth for the state, like
Yeah.
a 2.4% increase in GDP.
That's pretty good.
Yeah, but that was before the recent tech stock plunge and that surge in hedge fund short selling we talked about.
Right, so those projections might be a little bit optimistic now.
Yeah, I'd say so. The Comerica Bank report really pointed to the tech sector as a primary engine of growth, particularly with the rising demand for, advanced semiconductors and AI services. But with companies like NVIDIA facing some stiff competition from Chinese rivals like DeepSeek,
Right.
that growth projection is starting to look a lot less certain.
And it's not just about those big tech companies themselves, right? I mean, a downturn in the tech sector could send shockwaves throughout the entire California economy.
Oh, absolutely. Think about all the supporting industries.
Yeah.
Manufacturing, logistics, retail, professional services. They all rely on a healthy tech sector to keep things humming.
And then there's the potential impact on the housing market.
Oh, of course.
I mean, California already has some of the highest real estate prices in the country.
Yeah.
So if job losses start piling up in the tech sector,
Mm-hmm.
that could put some significant downward pressure on those housing prices, particularly in areas heavily dependent on tech jobs.
Yeah, no doubt. So we got potential job losses,
A possible housing market correction, and a ripple effect that could impact businesses across the state.
It sounds like there's a lot for Californians to be concerned about.
Yeah, it's definitely something to keep an eye on.
But let's play devil's advocate for a moment.
Okay.
Are there any potential benefits or opportunities that could emerge from this situation?
Well, one potential upside could be increased affordability.
Okay.
If housing prices do start to soften,
Yeah.
it could open doors for first-time home buyers or those looking to, move up to a larger property.
So a market correction could actually be a good thing for some people.
Yeah, it really depends on your perspective.
Perspective is key.
It is. And it's important to remember that California has a remarkable history of resilience.
That's true.
It's weathered economic storms before, and it has this incredible ability to adapt and innovate.
Yeah, think back to the dot-com bust in the early 2000s.
Yeah.
California definitely took a hit, but it bounced back stronger than ever. That's a great example. And that resilience really stems from California's entrepreneurial spirit, its diverse economy, and, those world-class universities and research institutions.
So for our listeners in California, what's the key takeaway here? What steps can they take to prepare for the potential challenges and opportunities that lie ahead?
Well, first and foremost, stay informed.
Okay.
Keep a close eye on economic indicators, both at the state and national level.
Okay.
Understand the forces driving market volatility and how those forces might affect your specific industry or region.
Knowledge is power.
Exactly. And don't hesitate to seek professional advice.
Okay.
A financial advisor can help you assess your risk tolerance, develop a sound investment strategy, and ensure you're well prepared for whatever the future holds.
So stay informed, get professional guidance, and don't panic.
Sounds like a solid plan.
It does. And one more crucial point,
Yeah.
don't lose sight of the long-term perspective.
Oh, that's so important.
Short-term market swings can be nerve-wracking. But if you're investing for the long haul, retirement, your children's education, your financial security, You can weather those storms and come out ahead in the end.
That's a great reminder. Stay calm, stay informed, and keep your eyes on the prize.
Love it. And remember, the business world is in constant flux.
Always.
What appears to be a crisis today could very well be the seed of opportunity tomorrow.
That's what makes it so fascinating, right?
It really does. There's always something new to learn, a new challenge to tackle, a new way to create value.
And that's what keeps things exciting.
Well said. Well, that wraps up episode 5 of The Business Buzz. We've covered a lot of ground today, from hedge funds making waves in the market to the potential implications for California's economy.
It's been a truly insightful deep dive.
As always, we encourage you to do your own research, stay informed, and make those smart decisions that align with your financial goals.
And if you have any questions or topics you'd like us to explore in future episodes, don't hesitate to reach out to us on our website or through social media.
We're always here to help you navigate the ever-changing world of business. Thanks for joining us, and we'll see you next time on The Business Buzz.